Hello, everybody. Today is Saturday, November the 9th, 2013. My name is Michael Wright, and this is the Weekend Elliottwave video. Just before going forward, please do pause the recording and read over the risk disclaimer. Okay, let's jump into some performance. You know what? As we discussed towards the end of October, we were glad that October was winding down just to start off the new month, start off fresh, looking at a new outlook. And so far, so well as we kick off November. Okay, indeed, the first full week, and so far this week we are up about 360 pips. Um, a lot of great trades. Not really any drawdowns, so to say, on the top edge, right? So I really like our back ways of trading, going back in terms of looking at viewpoints in terms of scaling back, adding on, etc. And we are still in a slew of trades. They have come back for the most part, but holding as of late. For example, we are in this Kiwi and short. A great catch. You know what? On the eye, we entered it at 82.66. That's probably the only real trade that's holding up pretty well, because if you look at the euro, the pound, they sort of bounced back, also adding some fuel to the euro yen, pound yen. We've seen that the dollar yen rose today on the back of the better than expected NFP results. So we had mixed sort of sentiment in the market, but in any case, Kiwi Yen is one that I still really like to the downside. We caught it a little late off the double top. I didn't want to really pinpoint it there, but thus far it has broken that next support area that you see here at 82. I will go ahead and I'll talk about that more, but this was the trade we were looking at that time, and we are about 100 pips in the money there, and we are still in pound yen. Okay, that's about 50 pips in the money. Gonna hold it. If I get stopped out at break even, so be it. It's break even. I still like that setup. So like, you know what? Let's actually jump right into the swing of things. Okay. So just looking at Kiwi Yen now, as it really shows its after effects. Okay, we broken support and we added on to this pair, right? We added on just about 81.75, so about 4 pips higher. Nothing too much. Stops are pretty far though. 82. 25 about, so we just missed it before, but it's still holding on as of late. Lock it in 40 on the first position, minus 40 on the second, so that'll be just about break even. And then now we're looking for a continuation to the downside. Okay, why is that? If you actually look at it from a daily standpoint, we actually see that the Kiwi Yen, there is momentum divergence that is pretty evident. Okay, divergence that started really from the December figure and is calling for a reversal. That's what we usually get when we get divergences. All right. Not only that, we also had a double top before this recent 4-hour one. All right, and then now what we're looking for is a move towards 72. So that's why for me across the board, why I'm looking to be a little bit patient with these yen crosses. Okay, they could break to the top side, so hence we're gonna still manage risk. We're not gonna leave stops out the money. So still looking for 72. In my opinion, it will be a little bit more difficult to get into these trades later. So that's why you see me loading up a little bit. But the risk management is there. Pound yen at break even. Kiwi yen, the first one is at break even. Swiss yen, we got stopped out at break even, but we did book a dollar Swiss for plus 61. So we did book profits somewhere in the mix. Probably could have done a greater job, but at the end of the day, what we're looking for with these yen crosses after being up a significant amount is more of a swing trade to the downside. Okay, not only looking at the Kiwi yen, but if we take a look at Japanese yen futures, we see that yen futures are at support. So what does that mean? That means so long as support holds and we make a U-turn, that the yen should rally. The yen rallying means a lower dollar yen, a lower Kiwi yen, a lower pound yen, etc. Right? Now we see this formation of correlations. Speaking of dollar yen, we see the triangle that it is still congested in. Okay, so until it makes a clear breakout, we are going to favor the downside. Okay, Obviously, if it breaks to the top side, our bias will immediately switch, and then we're looking for longs. So that's the great thing about being a trader, right? We don't have a bias. We're going to trade the market, but that's a better thing that we're up a significant amount to really kick off this next week of November. So again, we're more in a calm mode and a buy and hold or a sell and hold mode, and look for swings and really look to key in on those gains that we had, not really let them go, but more so expand on them as we look to end off this month strong. So we're watching the dollar yen. I'm going to keep a close eye more so on the daily breakout. But interestingly enough, one pair that I am looking at right at the open as we kick off next week's trade is this Swiss yen. Swiss yen, this is a breakout and a retest. All right. There's nothing more to see than that. I'm not saying over leverage because we have certain times in which the breakouts it becomes a false breakout. Okay. You always want to respect the market. All right. You know what? Sometimes I see in our chat room, some people may take 5 to 10% per trade. In my opinion, that's not good risk management. You always want to respect the market, okay? There's nothing better than respecting it. We all want to stay in for the long haul, so always keep that in mind. But in terms of the outlook, everything that we're seeing, Swiss yen, we're eyeing it right at the open, hoping there's not a gap in either side. Really looking for it to open up flat and taking that short. Again, you see that on the daily, and then we see it on the 4 hour. So when we first caught the Swiss yen, we caught it a lot lower than this. We caught it at, I believe, 107.39. Went to break even. Obviously, it was up almost 50 pips. It did reverse after NFPs, but now is right back towards the area that we ideally like to get back into it. And then stops, I'll put it at 108.10. Not gonna put it at the whole figure because sometimes prices tend to attract the psychological figures and then reject it. It may get close, and then sometimes when it gets close, the spread takes you out, right? We see that too much. We see that way too much. So gonna look to put it a little bit above 108, but I still like that because it'll give me about 65 pip move. But if it makes a 4 hour close above, obviously that will negate it and we'll close it and flip. All right, so there's not much risk on the table right now. The only risk that we have is the late CAD yen trade that I took, and even that still looks good as we kick off next week's trade because we broke out and then we retested. So ideally across the board, what we're looking for is a complete turnaround in these yen crosses. All right, see it with the dollar yen on the daily chart. We see right now with CAD yen. I showed you Kiwi yen, which is really holding up well, and that really comes off the back of the Kiwi dollar as it continues to continue its course on its southern journey, so to say. We do still have that open gap that remains there at 81.30, and then we have a larger one at 77.50. We have a deeper one, but let's keep tap right here. Okay, broke a lot of key support areas. Even right now, in my opinion, Kiwi dollars looks good for shorts because we broke support on this level. Now the next major downside targets are going to be 80.50. 80.50 is about 200 pips away. Could hold here. For me, I'm staying pat with the yens. Is just for me right now, the yens are a little bit more clearer. But if you're in the Kiwi dollar already, or you're looking to trade it, I do still like it for the downside. And the same thing goes for the Aussie dollar, right? Aussie dollar, kind of the same image. I like to see more fluctuations in the markets, but in either case, you're looking at 93 and 91.90 for next support areas. That's the 50% and then a 61.8% Fibonacci retracements. But on the other side, on the objective to that is pound Aussie. All right, so that's why I don't really want to trade the Aussie dollar or Kiwi dollar until it develops a little bit more, because then you have pound Aussie, which hit its ideal measured move, so now calling for a reversal. All right, so again, my focus to start off the week is going to be Swiss yen. I look forward to talking to you all in the chat room. If you're watching this video, please make sure you subscribe to our video. We're looking to elaborate more on that end as well. And good luck trading, everyone. Feel free to Skype me at wtcg.mike, or feel free to email us at trade@rightinv.com. Cheers, everyone, and let's continue this positive start to the month.